It is Thursday evening, August 6th, 2026, and this is our monthly update for the SOXL challenge. I want to start this video with something important. SOXL crashed hard last month in July 2026. Due to what became known as the AI stock crash, many investors could not survive their margin calls, including Leopold Aschenbrenner of the Situational Awareness Fund. But we survived this AI stock crash completely intact in July 2026, and the reason is simple. We never use margin. This month is a powerful, real-world reminder of exactly why that rule exists. Let me give you the numbers straight away. My SOXL portfolio plunged from $160,000 last month all the way down to $117,000 today. That is a paper loss of $43,000 in just 1 month. My total return dropped from 685% last month to 475% this month. That is a significant decline, and I want to walk you through exactly what happened, why it happened, and most importantly, what I am planning to do about it going forward. SOXL plunged from its brand new all-time high of $302 on June 22 all the way down to $91 on July 29, 2026. That low of $91 represents a 70% decline from the all-time high in just about 1 month. Let that number sink in for a moment. A 70% drawdown in roughly 5 weeks. So what actually caused this crash? Semiconductor stocks suffered a sharp correction in July 2026, marking one of their worst monthly drops in decades. This was primarily driven by a combination of extreme overvaluation following a historic first-half rally, broader macroeconomic pressures including rising interest rates and oil prices, and a sudden de-risking of crowded, high-beta AI momentum trades. Here is the important nuance though. Even though underlying artificial intelligence demand and corporate earnings remained fundamentally strong throughout this period, the market aggressively repriced future growth expectations, forcing a massive valuation reset after what many analysts are calling a multi-quarter sugar rush. SOXL closed today at $132, significantly down from last month's $181. Let me briefly revisit the full journey to provide important context, because I think history really matters here. We saw SOXL peak at $74.21 on January 4, 2022, followed by the devastating crash to just $6.21 on October 13, 2022. Then we saw SOXL peak at $70 on July 11, 2024, followed by that brutal crash to just $7.23 on April 7, 2025. The recovery that followed was absolutely remarkable. SOXL climbed all the way back to around $72 in February 2026 before the Iran war crisis sent it crashing to $39 on March 30. After touching the SMA 200 green line on March 30, SOXL shot straight up since March 31. On April 10, 2026, SOXL finally surpassed the previous January 2022 peak of $74. It took 4 years and 3 months to reach a new all-time high from that peak. And the lesson from that long wait remains just as crucial today. SOXL will eventually post new all-time high prices if we are willing to hold for 4 years or more. SOXL then hit brand new all-time high prices multiple times between April and June 2026, culminating at $302 on June 22, 2026. But as we have now seen repeatedly this year, what goes up sharply in SOXL can also come down sharply. The volatility is absolutely relentless in both directions. I want to reframe how we think about this. This is not a bug in the SOXL system. It is a feature that patient long-term investors can use to their advantage, provided they survive it without margin and without panic selling. Let's examine the SOXX daily chart in detail. SOXX closed today at $532. SOXX is significantly down from its all-time high of $655 on June 22, but notably much higher than its dip low of $464 on July 29, 2026. For those new to the channel, SOXL is a triple-leveraged ETF that magnifies the daily movements of SOXX, which tracks leading U.S. semiconductor companies such as Micron, AMD, Broadcom, Intel, Marvell, NVIDIA, Applied Materials, Qualcomm, and Texas Instruments. SOXX is currently sitting below the SMA 50 purple line. Here is the encouraging part though. SOXX seems to have rebounded solidly above the SMA 200 green line. This rebound pattern is actually somewhat similar to what happened on March 30, 2026, when SOXX also rebounded strongly above the SMA 200 green line. Compare that to April 2025, when SOXX plunged much further below the SMA 200 green line during that crash. This time, the rebound off the SMA 200 green line looks more like the March pattern than the April 2025 pattern, which is a modestly encouraging technical signal. Here is my clear action plan going forward. If SOXX reclaims and closes back above the SMA 50 purple line, we are likely back in a bullish continuation phase. However, if SOXX instead approaches the SMA 200 green line again, I will strongly consider buying more SOXL at that point. That scenario would represent a more significant correction and an even better buying opportunity than what we have already seen. On this weekly chart, SOXX has maintained its position near and above the SMA 20 black line since May 2025, demonstrating truly remarkable institutional strength over 15 months. Even more impressive, SOXX has stayed above the SMA 200 green line most of the time since November 2010, spanning an incredible 16 years. I fully expect this powerful long-term bullish pattern to continue for many more years, even after a crash of this magnitude. Now let's review my current holdings. I am not adding new shares this month since I have already invested $20,420 during the first 2 years of this challenge. Going forward, I am sticking to my plan of approximately $7,000 in annual investments. I want to share something honest with you. Last month in July, I was actually considering buying more SOXL if it dipped more than 80% from the all-time high of $302. However, SOXL rebounded after dipping 70%, so my trigger point was never reached. I want to congratulate one of our viewers who commented on last month's video and actually bought near $91. That took real courage and discipline. As I outline in my SOXL surge strategy video, rule number 6 is to buy the dips. More specifically, in cases of major dips, defined as more than 65% decline from the peak prices, we should try to buy SOXL as aggressively as possible. The drop rates of the 5 previous major dips ranged from 65% all the way to 92% from the peak prices in each respective cycle. These extreme fear moments have historically been the absolute best times to buy the dip and maximize future returns. So here is the honest question on everyone's mind. Since we just experienced a 70% dip, does that mean we have already passed the one big crash for this cycle? The truthful answer is that nobody knows for certain. We will continue to monitor SOXL closely and respond to the data as it develops, rather than trying to predict the exact bottom in advance. In my Roth IRA, I am holding 354 shares at an average cost of $24.71. The current value is about $47,000 with unrealized gains of more than $38,500, representing an amazing 440% return. My individual taxable account holds 525 shares with a current market value of about $70,000 with unrealized gains of about $58,500, representing a phenomenal 500% return. Combined, that is 879 total shares worth about $117,000, significantly down from last month's $160,000. That represents a decrease of $43,000 in just 1 month. The combined unrealized gains total about $97,000 on a combined investment of only $20,420, representing a 475% return. Here is the perspective I want to leave you with. Even after losing $43,000 in paper gains this month, for every $1 I invested, I still have almost $6 in return. That is the SOXL surge strategy working exactly as designed over the long term, crash included. My core philosophy has not changed one bit. I will continue to buy and sell based on the SOXL surge strategy, a term I coined back in 2024 to describe my systematic approach to SOXL investing. It remains a long-term swing approach tied to SOXX trends based on the semiconductor sector's pronounced business cycles. For the complete 8-step framework, watch my dedicated video titled SOXL Surge Strategy. Looking at the historical pattern on this weekly SOXL chart, major dips and peaks continue to appear every 2 to 4 years with remarkable consistency. Major dips occurred at 33 cents in 2011, 99 cents in 2016, $3.57 in 2020, $6.21 in 2022, and $7.23 in 2025. Each bottom is progressively higher than the previous one. This remains a crucial observation because it tells us the long-term trend is still intact even through this crash. Similarly, major peak prices have also trended higher in each cycle: $1.26 in 2011, $2.83 in 2015, $22.07 in 2020, $74.21 in 2022, $70.08 in 2024, and most recently $302 on June 22, 2026. Now here is an important question I need to address directly. Is $302 the actual peak of this current cycle? My honest answer is that I do not believe so. I still expect the peak price in this current cycle to ultimately be substantially higher than $302. My initial plan was to sell a small portion of SOXL when SOXX reached about $500, or in October 2026, whichever came first. SOXX has already surpassed $500 and sits at $532 today, yet I have still not sold any SOXL. As outlined in my SOXL surge strategy video, SOXL can potentially reach anywhere from $62 on the conservative low end to $484 on the aggressive high end in this cycle. I genuinely believe SOXL can go much higher than $300 or even $400 before this cycle fully concludes. So I want to wait several more months before selling any portion of my SOXL position. My broader investing strategy remains completely unchanged despite this crash. I contribute $7,000 annually into my Roth IRA to buy SOXL for 30 years. I use the SOXL surge strategy as my systematic framework. I avoid margin trading entirely to manage risk conservatively, which is precisely what allowed me to survive July's crash without being forced to sell. The focus is never on perfectly timing the market, but on using SOXL's extreme volatility strategically to build extraordinary long-term gains over time. Although the semiconductor sector still has pronounced cycles, as this month painfully demonstrated, AI is fundamentally changing those cycles from the classic 2 to 4 year boom-bust model to more of a secular growth plus cycle model. The smartest stance remains to expect longer upcycles, less uniform cyclicality, and occasional violent drawdowns that are still very real and very painful. This 70% crash in roughly 1 month is a perfect and humbling example of that reality. Despite the volatility we are experiencing, my conviction in semiconductors remains absolutely rock solid. AI, cloud computing, and high-performance computing are still in the very early innings of a massive multi-decade transformation. Patient investors who stay disciplined through the inevitable ups and downs, and who never use margin, will likely be rewarded with substantial long-term capital appreciation. Let me close with the August 2026 summary. SOXL crashed 70% from its all-time high of $302 down to $91 before recovering to $132 today. My portfolio dropped from $160,000 to $117,000, a $43,000 paper loss. Returns fell from 685% to 475%. SOXX rebounded strongly above the SMA 200 green line, similar to the March pattern rather than the more severe April 2025 pattern. The key question going forward, was $91 the bottom, or is more volatility ahead? We are in this for the marathon, not the sprint. If this update added value for you, smash that like button, hit subscribe, and drop your thoughts in the comments. Stay disciplined, stay patient, and keep building that wealth mindset. I will catch you next month. Peace out, SOXL family.